Imagine this. You invest just Rs1 Lakh today, and by the end of 2026, or in the next few years, it becomes Rs1 Crore. Sounds impossible? Most people think so. That's why they stay broke. But there's one hidden strategy the rich use quietly that 99% of investors completely ignore. Stick around. I'll reveal it step by step with real math, 2026 trends, and exact funds of Ash stocks. If you miss this, you might regret it forever. Let's dive in. Hi friends, welcome back to Capital Craft, your go-to channel for smart investing in Pakistan and India. In 2026, inflation is eating savings alive, 8 to 10% in many areas. Bank FDs give only 6 to 7%, and most people lose money to bad choices. You want financial freedom? Turn small money into big wealth? But how do you realistically grow Rs1 Lakh to Rs1 Crore without gambling? Today, I share the hidden strategy. Compounding plus high growth equity focus, but with a twist everyone ignores. First, let's be brutally honest. At 7% FD PPF rate, Rs1 Lakh becomes R1.97 Lakh in 10 years. No Crore. At 12%, good mutual funds average, it takes them 25-30 years to hit Rs1 Crore, compounding magic. At 15-18%, possible in equity, small mid caps over long term, 15-18 years possible. To do it faster, say 10 years or less, you need 25 to 30% plus CAGR. That's multi-bagger territory. High risk, but doable with smart picks. Rule of 72. Money doubles every on 72 rate years. At 15%, doubles in 4.8 years. From 1 lakh, 2L, 4L, 8L, 16L, 32L, 64L, 1.28 crore in 24-29 years. Add monthly SIPs, game changer. Hidden twist, most ignore consistent monthly additions. Plus reinvestment in high conviction areas. The strategy everyone ignores, SIP in high growth equity, plus multi-bagger hunting, plus discipline over hype. Here's how to execute in 2026. 1. Start with SAP discipline, the real power. Don't lump sum only Rs1 Lakh and forget. Add Rs 5,000, 10,000 monthly via SIP. At 15% return, first 10K month SIP plus initial Rs1 Lakh can reach Rs1 Crore in 15-18 years. Realistic. Top 2026 SIP funds based on recent performance. Parag flexi-cap, consistent 18-20% plus long-term. HDFC flexi-cap or SBI-focused fund, strong in volatile markets. Small mid-cap like Bandhan Small Cap or Invesco India mid-cap, 25% plus in good runs. 2. Hunt multi-baggers. Smartly, the high-risk, high-reward part. Allocate 20 to 30% of portfolio to potential 5s2 to 10x stocks or sectors booming in 2026. Renewables Tosh EV, e.g. Suzlon Energy, clean energy plays. Rail infrastructure, Jupiter Wagons, Tedigar Rail. Banking, finance, AKCI, Bajaj finance types. Tech defense if trends continue. Research tip, look for low debt, high ROE, 15%, growing sales, 20% YY. Use Screenered In for filters. Avoid penny stocks. Focus quality small mid caps. 3. Diversify and rebalance, the ignored step. 50-60% in flexi-large cap funds, stable growth. 20-30% mid, small cap, multi-bagger potential. 10-20% international, Parag style, or gold for hedge. Rebalance yearly. Sell winners, buy dips. 4. Risk management, don't lose it all. Emergency fund first, 6 months expenses and FD liquid. No borrowing to invest. Patience. Markets crash, like 2022, but recover stronger. Real example. Many turned Rs1 2 Lakh SIPs into crores over 10-15 years in funds like HDFC, Flexi, or Axis Midcap. In 2026, focus on AI, green energy, infrastructure boom, India's capex cycle. Avoid hype like unproven cryptos or meme stocks. Warning, no guarantee, past returns future. Consult advisor if needed. High returns do not mark high risk. So, the hidden strategy? It's not magic. It's consistent SIP plus smart equity allocation plus ignoring noise. Start today, open to Matt, pick one fund, set SIP. Which fund or stock are you eyeing for 2026? Comment below. Like, subscribe, hit bell for more wealth tips. Share with friends who need this. See you in the next video. Turn that 1 lakh into crores. Peace.